Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream is about integrating bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. The TraderLab is a group of like-minded traders that come together to leverage their collective experience it is about the business of trading using structured trades, building trade plans, that only interacting with the other participants when you have a statistical edge. The business of trading is really more like gaming versus gambling. Um, we all can have winning trades, and we all have winning trades even with a dart or a magic 8 ball. But the business side of this business is the same as gaming, so it's all about edge. It's all about patience. It's all about discipline. And the way that you potentially can get those elements together is by doing the work of creating a plan. And the idea of a plan is not to be making it up or impulsing or responding to emotional triggers, but to have more control, more intentionality, and waiting for the locations where your edge might show up. And the outcome, of course, of any individual trade is random, but if you actually have done the work, extracted an edge, same as the casinos, over time you'll extract the dollars from the other side. And each individual trader, you might say, finds their own rhythm or fractal or rotation that they gravitate towards. And that's why the business of trading is not one size fits all. It's very much an alignment issue with your psychology, and also ultimately the metrics that you extract that demonstrate to you maybe the adjustments that might be needed to potentially become a consistent, profitable trader. And of course, past performance is never indicative of future results. Even if you have an edge, you have to be able to develop the ability to execute it. All of those are elements to becoming sustainable in this business. TraderLab might be able to help you on your journey. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's go over the higher time frame. Remember, this is not a trade calling room. This is for educational purposes only. This is what the 60 PDFs that I share of structured trades look like. They are actual trades I've taken and just mock-ups of ideas. I'm not a vendor. There's no cost for this. These are just examples of some concepts that I developed and employed in my own development over many years. There's no such thing as plug and play. It doesn't exist. If you take these ideas and do plug and play, I can suggest the probability of you creating any kind of sustainability might be close to zero. And again, your mileage may vary, but you can get ideas. And the reason I shared these is traders were asking me, what's going on? What are you doing? So I posted some ideas, but this is not the full Monty. There are a number of pieces, and here's piece number one. This is called the higher time frame, or let's rename it, call it the intermediate time frame. This is yesterday's RTH, day before. Now, what's interesting about this, and I've been looking for on this day to come under here and take the stops out here. We didn't do it. On this day, stops are under here. So stops there, stops there, stops there, stops there, and wherever. And then stops under this day. Inside day typically suggests potential change. It's a compression of energy. Now, let's go down in, quote, time frame. What is this? If you've been following the stream, what this is a composite profile. And what it's basically doing, I'm isolating outside edges of rotations. And what I want to see is the volume. And what the volume does, it shows me where we run out of buyers, a fair price, high volume, think shopping, and a low price. And the market tends to rotate in these areas. If we fall outside of an area, then we can do the same thing over here. What's too high? What's too low? Well, if what's too low in this consolidation, and this is what you're looking at, is volume distribution is a consolidation or of an auction. I'm not paying that. Yeah, but it's on sale. Retail. What happens if the current price One moment. The current price is too high. Well, we can leave it. So what happened yesterday? Well, the day before yesterday, this yellow line is aligned with this. That's our fair price. What happens yesterday? Well, we come down, we check 1375. Now, this will get a little strange for you. In the RTH, this is the highest volume. This is just yesterday, right here, yellow line, too high. Value area is the yellow box. That's where 70% of the volume took place. So it was compressed, and it's an inside day. And often when you have an inside day, it's really like, we used to call them coils. A coil is like a spring that gets wound tight, and that energy potentially is going to be released. And again, who knows? So yesterday, this was too low, 1375. And what else do we know? Stops, 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 stops. Is everybody tracking so far? Now, let's look a little further down the hip parade. What do we know? We know this was at one point a high volume price, 81.50, and we know this at 70 was a retail price from here. So that sets up the following possibilities. Well, north, of course, or come out the bottom. And we had news. Don't forget a fundamental input. We had the attack of on Iran by Israel. So that, is an input that will cause the participants to revalue. When you have extraneous inputs, and it can be economic reports, it can be a tweet, or any kind of geopolitical event, that input will disrupt the auction, the perception of value, which is what this is all about. And then that new input needs to be auctioned. And either it's going to create an opportunity to get long, to go with the higher time frame trend and get continuation, or there's a change, and then any counter rotations or of the responsive buyers, and I'll go into that, might create continuation short opportunities. So this is yesterday's RTH close. Let's go take a look. Now, I'm going to show you what this looks like. This is today's RTH open. Now, here's what's important. This is the value area from yesterday. This is considered the fair price or fair valuation. Too low, too high. The orange line is retail, and it's inside this area of distribution of volume. I'm not paying that. Yeah, but it's on sale. And this is called a single. And all a single is when there was urgency and we didn't pause an auction. We just left it. And notice where this is. So yesterday, it looks like everything was nice except inside. So we couldn't take out yesterday's high, previous day's high, and we didn't take out the previous day's low. And if you guys remember in the morning, I was on short going for this. And as they say, c'est la guerre. So, and then longs and whatever. It's all in yesterday's stream. So now what? We open here, RTH open, and we come back to 14, where is it? Here, 1375, 14. So we open below, and this is now resistance. Remember, support becomes resistance. A deep concept for this astute group of traders. And then what might that set up? Well, if this is too high, and we get responsive buying, that is those who go, oh, this is a great opportunity, and they respond to the lower open. Don't forget, the trend is up, and we can't get through here, then we can bounce off it. It's too high, and then potentially come down to 70. So for me, in my initial plan for the day, it was shorts. Now there's another piece I got to show you, and I'll show you this in Bookmap. So let's remember these elements. Now, there's more, as they say. That's the value area low. Remember, 70% of the volume took place. And if you don't remember that, or you're late to the stream, I just reviewed this at the top of the stream. Now, here's the piece that also put me on the idea of the shorts today. This is the retail price from yesterday, 45. I'm going to bring you back. I got to do it. 45. Wow. Let's do it this way. Up here. Where's the ETH high? It's right here. If that price, the shoppers go, I'm not paying that, then where's my next price? 13-ish. Remember, horseshoes and hand grenades, and 70. So this is kind of my ballpark. And the other piece was, if I test a level in the ETH and reject it, that also sets me up for potential short. So everything for me, short. So now what do I do at all this? Well, there's my level. That is my resistance, and that's too high. And I'm outside of value, and I open outside of range. So the possibility is to come back, check, wherever, and then south. So that's how I started out the day. Let's go take a look. And these are not recommendations. Anything you see here, I am sharing is just methodology and process. There is not one way or a right way. I can tell you what's the right way. Not your way, the right way. And that is only getting involved with a trade plan that is pre-prepared. And when you walk into the market, you basically bring your plan, put your helmet on, and wait for your trade. That's it. There's nothing more to do this. The outcome is random. So it's not about making it up. It's about defining your edge. And then whatever, that's that. Hope you guys are getting something out of this. How we doing in YouTube? Everybody doing okay? Please give a like. So let's look at the first trades. And again, some of these are structured trades. I've shared these in the TraderLab. Others are more advanced. That is only after you do everything else and you know you have a statistical edge. This is a process. This is not a plug and play. Plug and play doesn't work, in my opinion. It never worked for me, but everything works randomly. I think that is one of the bigger problems for us because gamblers win. So if we are gambling, we're going to have winning trades. The problem with that is if we keep having those random winners, are we actually winning or are we losing over time? Everybody has winners. So if everybody has winners, what differentiates those who have winners and are sustainable versus those who have winners and go out of the business? It's because they don't have an edge. They're just gambling. You have to decide if you want to keep gambling or if you want to attempt to create a sustainable business model. So RTH open, and what are we anticipating? And again, no clue. The open is a very high risk place to trade. Yesterday's low is here. That key level is here. Okay, the 15, 14-ish. So what I'm looking for is the possibility of responsive buying, getting long, buyers responding, oh, it's on sale, let's get long. And then what happens here? So this is an area and also coming up and filling the gap. Settlements way above us, right? So there's a lot of things that suggest, plus the ETH, that maybe we'll go lower. And maybe's the best you got. Let me see what else I have over here. There's my 70. Okay, let's go. So RTH open, liquidity. I see my responsive buyers, no clue. This is called the developing volume point of control. And we're in here 30 seconds, so this is not actionable. What it's doing is it's helping me see the shopping. The shopping being is high volume is represented by that yellow line. And this is an auction. So as the volume changes, it is suggesting, remember, not saying, suggesting that this price might be too low. So as more, and it starts at 0. So this thing is very sensitive. And I always suggest in TraderLab, you don't trade the open unless you're already got everything nailed down and all the other elements and have vetted structured trades and you are a profitable trader. You study this, you don't trade it because if you don't have the other elements, because of the speed, and this is going to shift all over the place. So if you don't understand what it means, it is not plug and play. And I really want to caution everybody that you just don't take what you see here or anywhere and just now say, oh, I'm going to do this and get the same results. There's more to it. The VPOC migration, too low. Now, what it's saying is there's more volume here, and we've left this behind. New retail price, and we move away. What does that say? Follow the language, or the yellow brick road as I think of it. Too low. And what do I know? This, in a higher time frame, is my retail price. Now, I'm going to talk to you about fractals for a moment. What is a fractal? A fractal, you can break a fractal down into anything you want. And a fractal is a rotation. And rotations are not time-based, at least the way I operate. They're really participant-based. So I'm not fitting the market in a box. I'm reading order flow, and I'm trying to read the behavior of the participants, and that I have levels. So yesterday's low filled a gap, and this thing. So let's look. Going up, I have no trade because I am not getting long. To me, it's shorts. So let's see. Going higher, oh, it's going to the moon. Gee, my psychology, the lunatic under the hood is going, maybe, gee, I think you should have got long. But my plan says, wait. So let's keep waiting. Buy sweep, this is the first suggestion of a reversal, and there's my location. Is everybody with me? This is the first short. Are you guys tracking? I want you to see the development. How we doing in YouTube? And how we doing in the TraderLab? Okay, so too high. Now let's look at something, again, advanced concept, and you have to vet it. See if this doesn't make sense. If this is the shopping experience, and trading is shopping, so don't get all hung up on it being complicated. If you ever go to the supermarket, you already understand what's going on. What you don't get is randomness. That is where we have, as they say, trouble, because we are not wired to operate here. But let's try to read the language of the auction. Too low, too low, too low, too low, sweep, too high. Trigger. When we notice we haven't broken below the migration of the volume or the shoppers. Here I get a sweep. Now I got one here, but what happened? I didn't rotate down. I get one here. Support is here. Up, and now I break below. I have not broken below any of these until here. Would you call that a potential change? And what else? Location, location, location. This is my first short. And again, this is something that is a little bit more advanced. And the reason I'm taking a short here is because of something called context. And until I get above this, the context is shorts. So let's look. So this is a trade. It's a bit more advanced. Too high. And now this is support. So when I break here, if I don't hold this and go up, then it sets up the short. So this is a short. Stop is up here. Notice where we come back. Let me show it to you. So what I'm doing is I'm being a shopper. And let's look at the language of the market. The market is speaking. Now, it's a foreign language, right? And most of us use our indicators to interpret, right? So we have little Google Translate on. But instead, if we understand what's going on, why did the market leave this price? It's too high. So how might I see that? In a sweep. The sweep suggests counter rotation. And I know I have a price that is too high. Now, is it really too high? I don't know. Now, what else do I have? Higher time frame, this. This is a fractal. Here, this will get you. This is where your brain starts to go flipping and your head turns around. If we think multiple time frame like you do, this is an intermediate time frame, one of these. This is the same thing, except this is higher time frame. Let's go back. So I'm doing the same thing in all time frames. There's this, and that's based on all the volume in here. In the developing time frame, that's that level, and this yellow line is the same thing, except it's in real time in fractals. Okay? Is this making sense before I go on? So this is my first short. My stop has to be above here. I can enter here if I'm aggressive. I mean, if I understand order flow, I could enter here, 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 stop there, and then the longs that are in here, if I can't get over this, then this is my short, and I'm looking to take this swing out, and then I have targets down below. Okay, so for me, it's shorts only. Anyway, let's see the short. You don't get stopped out, teeth chatter. Where do I come back? To the level. Why did it not go up? Great question. What do you see here? Icebergs. So what is happening here? Absorption. What happened here? Absorption. There's the iceberg. So when the buyers lift here, there's passive sellers, and there's the liquidity. This is how order flow comes together. And then where are we trying to go? Here and out the bottom. Where's the opening swing low? It's down here. So out the bottom, okay? Now, at 9 a.m. Central Time, we have Michigan pre. I always suggest to TraderLab participants not to trade reports. Then there's a few reasons for it. One is it's like talk about gambling. That is a gamble. The other part of it is risk management. When you get and Michigan pre is a key report. Michigan pre 9 a.m. Central Time, it can be a market mover. If you look at the order book, right when this report was coming up, in the ES, we had 5, 7, 11 in the book. If you're on the wrong side, they're going to call you in about a month to let you know where you got filled, and it can be anywhere. Been there, done that, not interested. So pre-report, you could cover. Now, let's look at the next structured trade. Or, let me give you the or. Your stop is way out here, and you're willing to give back your MFE. That's individual plan. I'm just telling you what I do. I'm not saying it's a good plan. Report comes out. Let's look at the next structured trade. So what do we do on the report? VWAP mid, and it's like somebody, stepped on a rake and got hit in the face. Bang. Ow. Okay. Now what? Well, this is out of here. I did not get back here. This is just a reaction. I hit the VWAP in the mid, and let's look what else is going on here. Buyers, and what's happening to these buyers? Stops are coming out. Who are they? And now we have sell icebergs. And I get my sellers are below my buyers. So this is absorption. What does that tell me? Get short again. For what? South of the border. And this is my target, 70. Okay? And again, no clue. Watch. So my sellers are here. And now I'm going to show you something else. Now I'm going to take you down in a fractal. And this is how I do this. Doesn't mean it's a good idea. It's just something. Let me show you this. Now, the market's going down, and we know we have the report. Okay? So here's a sweep. And often when we see a sweep, we see a counter rotation. And again, it's not mechanical. It's just like maybe. Because maybe it'll do this, maybe it'll do that. And in trading, the best you have is maybe. What else do we know? The market is short. What does the market tend to do? The market tends to go up to go down. And it goes down to go up. So we're going down. Where are the stops? The shorts in this leg, if they're hanging out in here, have their stops above the swing. Okay? Report. What happened here? There were buyers here. See the icebergs? What happened right here? let's look at this. This is very important for those of you who are interested in understanding the behavior in fractals. I call it microstructure, and I think a good way to relate to this is think of Matryoshka dolls, you know, the Russian dolls. What happened here? Sellers are here, sweep, buyers absorb there. Sellers are here, absorption there. No clue, by the way. Sellers are here, buyers are here. That's what I know. That's as deep as it gets because I can't know anything else. Let's look a little further. This is, and the output of order flow is price action. So the idea to help you recognize is that you start using elements like drawing tool, because now we know what happened. Sellers are in control up here. You see them? The buyers are absorbing here. And right here, no way to know. Let's watch the change in behavior. Here's the high volume node. What is this? Isn't this a fractal of that and this? So if this becomes too low and I come up here, I can come back and test it. Let's see. Let's just see what the market does. Who knows, right? Part of the throw. There's your test. So too high, too low, not actionable. Draw on the floor, too fast, not my job. But what do I know now? I found too high, and I know where my buyers are. They are there, and they are here. This acts like a volume point of control in a fractal. So I have too high, too low. So if I come back to where the selling was in some place, and I'm going to draw a little box, I'm going to show you the opposite side of this fractal. I just want you to see how you can kind of organize and read it. What happened here at the VWAP? Sellers. My buyers are here. Why didn't it go up? Absorption. Who knew, right? Right here, I have buyers. Let's look. Buyers are here. Sellers are there. I'm going to put a little box here. And it's VWAP and mid. So that's the mid. Back to the top of this. So let's look at this thing. This is structure. And this, again, this is a way that developing traders can organize behavior. There's two places. There's right here, there, because the sellers got below the buyers. This volume up here is resistance. Or let's put this one down here. I'm going to just show you two ways, maybe, if I can get this to work. Come on. The volume is here. So let's watch. Sell trigger to sell trigger to there. Let's watch a little more. Someday we will have this, Bookmap will have this so we can extend it and we don't have to do this. So let's just look at this. So we have this, okay, and this. Support. Let me move this out here again. And again, I apologize. This drawing tool doesn't really cut the mustard, as they say. This is resistance. This is resistance. Support. See the behavior? So potential short to there, to there. And now we get a sweep. The sweep suggests counter rotation. Let's see what it does. And it doesn't have to do anything. You know, this is part of the thrill. Support. Resistance. So for me, it was shorts only. This comes in the book. And this is interesting because if you're using a order flow tool, you're aware of this. And this is the target. Now, what I do is my primary input is going to be the auction. However, I know that if I see buying icebergs here and this is resting, you notice how this pulled over here? So yeah, not much, but this is sitting in here and more is being added as we come down. And there's my sweep. Right here, I know the possibility, that's as far as I know, of a counter rotation. Now, in your trade plan, how are you managing this trade? I'm asking you because what I do and you do are going to be different. You know, we have some traders in TraderLab who are going to put this trade on and take a nap. We have other traders in TraderLab who are going to be managing behind structure, you know, and they're going to accept that if this just counter rotates and then goes lower, they're going to, you know, not get it because it's all random. Now, we have other traders in TraderLab, and we are having this conversation this morning, who are going to be fading this thing. Now, there's a level here, which is material, and this is more the primary level for me. So this is here, and we got below it. So when we get below this, I'm going here. And then this trade went, as they say, to the happy hunting ground. So that trade was over. Now, what do we know? Let's talk about what we know. If this is too low, and at the time you don't know it is, then the possibility is to come across the range, squeeze out the shorts, and nobody knows. And we have a couple locations again. This is a variable high volume node. This is a variable high volume node. When we come up here, this is resistance, because this is now our current retail price. And I know this will make you a bit crazy because you're going to see levels. Why didn't it stop there? Well, mid and VWAP is where retail traders put their stops. So I don't run in front of levels that I know retail trader behavior. And it doesn't mean it'll get there. It doesn't mean it won't just keep going. So now let's come back and look at this. When I come up here, now I know the market is short and I know the possibility exists to get squeezed out. Those are the things I know. And it's like anything else in this business. Who knows? Out here is something called the low volume outside edge of a distribution. Now, I have rejected what's above so far, right? I'm outside of yesterday's range. Everything says south of the border until it isn't. So I am looking for short continuation trades. I am extremely conscious that we could have a squeeze. That's what I know, but until it has, it hasn't. Let's look. Market comes up here. This is my resistance. My stops are here. 86, 88, 40, 61. Watch. Selling icebergs. So this area here sets up a potential short if it's vetted. This is a microstructure. So I don't know right here. You know, I'm just like everybody else. I don't know. Because I can't. I don't know. But what I'm doing is I'm narrating the auction and I'm looking at behavior. So what do I know here? My sellers are here. My buyers are here. My sellers get below my buyers. That's the first thing of interest. Let's look at this. My sellers are below my buyers here. What does that tell me? Sellers are here. Where are my buyers? They are there. They are here. They are here. And there's my sellers. Why aren't we going down? That's absorption. So the sellers are being absorbed. What does that tell me? Higher, higher, higher. Buyers are there. Buyers are there. Going to the moon, Alice. Higher. What happens here? Sellers are below. Absorption. Buyers are there. Buyers are there. Going higher. Break low. Uh-oh. Sellers are here. Sellers are there. Buyers are here. Under, which is a trigger. Then watch. Then either you have an entry or you don't. Subject to, depending on how you do this, you could be entering here, or if you're using a structured process, you'd be waiting for a retracement. Your stop would be here. You have to vet this, and then you're looking for continuation. That's the deal. And either it does or it doesn't. You know, there's a sweep. Now we have potential resistance. Remember, resistance was here. You take it out. We come out here. Now, since we took it out, it is support. I get below it. It becomes resistance. Where am I trying to go? Trying to come back lower to somewhere. Now what? Find our buyers. Where's our resistance now? It's here, here, here. Trade's over. Okay? So you'd be risk neutral if you took a short here, and that's all fine. Now there's, as we say, questions. What's happening? So for me, that was my last short. And now what's the key location? This. What's the condition of the market? Short. What happens at the opening swing high? If we just pick them, we can, right here, we can squeeze out the shorts and come back in, back here. That's called an IBF. It's a structured trade. Or if we can't get back inside, then we can continue up the food chain. And that's what we're doing. So this sets up something called the IB continuation trade. Now, initially this morning, if we got inside, the trade, the long side trade was out to here and maybe here. So those now the targets for the longs. Here, here, and maybe further or maybe not. And maybe the ETH high is here and yesterday's high. So all this is if this was too high, selling, and now we get above it, it is now too low. It becomes support. So we have the developing volume point of control, retail price, remember, too high. And this was our short, right? The last short. So too high, too high. Come across and it shifts up. Now it's too low. If it's too low, new retail price, where are we going? This is the IB right up here. If I clear the IB, I have what's called IB or range extension. I come back to what? My support. This is called the IB continuation trade. It's a structured trade in the TraderLab, and it's a long from here. You'd be risk neutral, and then again, targets are here, here, and whatever. Any questions? This is the TraderLab, right? Oh, and by the way, 27. I didn't put it on here. Should be on here. Let me show you something. It's another target. 27. But there's there's 27 is a target, but here. But this, to me, if I get through 27, then it's almost like, bus stops. What's going to happen at a level? Let's look where that level came from, the 27. And I did not get it on my chart. This 27. So all of this was the key level. Remember that micro composite volume point of control. Bang, shorts going for this. Fine. Come across now longs, and this is 27. And let's talk about what this thing is. This is where the auction was yesterday. Too high, too low, retail. And here's your value area, 70% of the volume. The market ripped through this and accepted this area yesterday. And unfortunately, it's an inside day, so, that's up for grabs. And stops are below, right? So we know, and I've been saying for a few days, if we can grab inventory, we have to see, and that's the whole thing. You don't know, and nobody knows. When we fall out, then this is now resistance, because think of it this way: too high, too low, retail. If what was too low becomes too high, it is resistance. If I clear this, then I am coming back potentially in here, and maybe even, and don't forget the ETH high was here. All that is on the hit parade. And statistically, and I go over these, and these are available to you in TraderLab. Let's see. Lower out of range. Taking out the first hour's higher low, 98% probability. Taking out the ETH higher low, 91% probability. Taking out the value area low, 45% probability. There's more. Overnight high, 32. Point of control, 30. Here's what's so interesting. If you take statistics in a vacuum, they are going down as far as the probabilities of all of this. If we take context, which is the number one piece, what has the market been doing? Going up. How do you reconcile that? You have to have a priority of inputs. The context is up. You see, the main intermediate retail price is 13. Resistance, support. If I get back in here, I've got 27, I've got that, and, whatever. Okay? That's how you put the pieces together. What happens is part of the thrill. We don't know. So the last trade is long here. This is called the IB continuation trade. Now, here's the other thing about this. You really need, and I'm only giving you an opinion. I'm not saying it's anything, it's just an idea. You need to know where your trades are before. And then if it shows up, now this is the entry right here. Let's look at this thing. So at 9:30 Central Time, we have what's called the IB. And the IB is the first hour, we know, has over 98% probability to take one of them out. And about a 30% probability to take both of them out. So, that's life. So if we know we have a 98% probability and we come across the range and here's the key, above here, then when I break out of the IB, then right here, I have a sweep, which suggests counter rotation. Okay, I know that. I know right here, I had buyers there, sellers are there. They were absorbed. Breakout, pull back to where? To here. Buyers are here. Breakout, sell sweep. What does that suggest? Counter rotation. Where's my structure? Where's my location? Here. Buyers are here. Sellers are there. Sellers under the bus. What do I know? Buyers are here. Buyers are there. Sellers were here. If I put my little box around this and the breakout, then this is my area. And why would it be my area? Let's think order flow. If I got sellers and the market goes up, why did the market go up if I see the sell delta? It's because they're absorbed. If the buyers now are here, and we know that, and it's in alignment, location, real estate, location, structured trade, location, entry, test, absorption. Your long can be here or right when anywhere in here. And your stop needs to be under here, not here. Why would you put it there? Because the market can come under, pick off the stops here, and the buyers that are here would then potentially come in and take advantage because they thought this was a great price. Oh, I'll buy that. So if you put your stop here, high probability, in my opinion, how many times did you get your stops picked off? Only to see it come a couple ticks against you and then go. What that is the momentum of the sell stops is taking the market down, but you need the passive side, the icebergs, to come in and consume. Now, if they're not there and the passive guys get absorbed, the buyers get absorbed by the sellers, then say la guerre, you get the coupon to the buffet. Otherwise, structured long, and where are we going? 27, that's one, and then up. Last trade so far. Are you guys tracking? You get something out of this? How we doing in YouTube? Please give a like. This is just trading, guys. I wish I don't know what you think of this. I know that for traders in TraderLab who vetted trade plans and only trade where their edge shows up and hang out and let somebody else enjoy the other stuff. If you have a plan with an edge, your job is not to play a video game. Your job is to really put, as they say, the odds in your favor. And if you know where your trades are, you don't need a lot of trades. What you need, in my opinion, again, it's just me, is range. Anytime you put a trade on, obviously you're taking risk. Now, there's a couple of things about this. Are you taking risk for dopamine fix, or are you taking risk because it's intelligent, it's vetted, and it has an edge that favors you? The more risk you take or more trades, the more chances you have, of course, of being stopped out. Not necessarily more profits, more risk. Well, I kind of come from the other direction. I want less risk and more profit opportunity. And of course, I take stops, you take stops. The difference is I'm not putting a lot of trades on. I'm putting on trades that have edge. And even though I take stops because the outcome is always random, I'm trading towards range because I can understand that if I get range going one way and then it changes, my job is to narrate the condition of the market, which is called context, recognize transitions as it's developing. In other words, when it goes, gee, it's not going down anymore, what are the levels where it might respond and continue down? And if it pushes through those levels, then I have hands off. I'm going, this thing might be in transition. I don't have a trade. Where's my next trade? Well, this is, for me, my first long. That's it. And I'm okay with that. This pays the bills and puts pizza on the table and a pint of ice cream for the movie. As a trader, would you be okay with that? The range. And then trade management process and getting risk neutral. This is the business of trading. I hope you find it useful. Might not, as they say, light your fire, but we're in the business, I think, of profits. Just an idea. Not adrenaline and dopamine, unless that's your thing and you have an edge with it, of course. Does that make sense? How are we doing in YouTube? Please give a like. Remember, if you're visiting in YouTube, there's a link in the bottom over there. You can visit TraderLab. There's no cost for it. And there's a library of webinars and a lot of other resources, not to mention the community of traders. These traders, now we have everything from developing. Everybody's a developing trader. So it doesn't matter how long you've been doing this. We've all done the same stuff. Anything you've guys done, I've done. And I've been doing this going on 46 years. So, but everybody does the same thing. Okay? The difference is, do you keep doing something that doesn't work, but has random winners? I have to tell you, the thing that got me over the years was trying to fix a defective process that I didn't know was defective. That is the ultimate catch, I think. We all have winning trades. And I think here's a question for this astute group of traders. We all have higher time frame software products, right? Doesn't matter. Open that thing up. What is in there? 100 indicators, 200, pick one. And then you get the chance to use Renko charts, bar charts, candles, which probably most of you use, tick charts, range charts, PNFs, Oh boy, Fibonacci, Elliott wave, I don't even know. Pick, MACDs, RSIs, Keltner channels, blah, blah, blah. Why are there so many indicators? Is it, and you know why? In my opinion, they all have winning trades. Great. And then we mix them with multiple time frames. And then we curve fit them. Great. What does that do? Me? Not enough. Because if you have random inputs in a random environment, there's an old saying from the early computer days. It used to be garbage in, garbage out. So garbage in, garbage out. So random winners, but no edge. So the gamblers have random winners, right? And the house has an edge. Over time, The house is extracting the dollars from the gamblers, even though they pay the gamblers. So you can have a lot of winning trades and still lose. How does that work out over time? You go out of business. So if that's what you're doing, and I coined a term, and it was for me, Trader Groundhog Day. Work hard, wake up in the same place. Throw a few years under your belt and wake up with the same results. Then you have to ask yourself, why? If you're working hard, which is great, and you're studying and tuning and tweaking and making progress and then ending up in the same place, it's Trader Groundhog Day. Why does that happen? It happens because you don't have an edge, but you always have random winners. So you can spend your potential career development in a process that's not aligned with the business you're in. We're in a business of 100% uncertainty 100% of the time. So are the casinos. So the only way around that I have found, and I think if you talk to other traders who have sustainability in the business, it's just waiting for the trades that give you the edge. Same as the casinos don't make up games. They only play games where they have the edge. That's a proven business model. Think about it. By the way, I want to show you briefly the TraderLab community, just so you can see what it looks like somewhere in here. So we have a chat. It's a professional environment. It's not romper room. You know, I'm sure a lot of you guys, you know, in your travels have been in places where it's ridiculous. But we have a lot going on in here, a lot of interaction, mutual support. TraderLab is really an advanced trading methodology, but don't let the term advanced disturb you. Advanced doesn't mean complicated. It actually is simple. What is complex to us is randomness. That's where you get caught because we are seeking certainty in an environment where it doesn't exist. I understand. That's our emotional needs. How about solving for the environment you're in, which is random? If you know you're in a random environment, then you're not going to look for certainty. You're going to look for edge. Big difference, isn't it? And I know we want certainty. You know why? We're wired to avoid risk. It's very logical. By the way, and Ned, thank you for doing this. There's a library of webinars I've done over the years, some of them up to 4 or 5 hours long of real-time narration. Now, my time is rather limited now, but watch the primer webinar. It's like a high-level overview. It's about an hour. That'll get your toe in the water. It'll talk about this business and a little bit about me, which is not important, but it's got about 32,000 views, so you might want to check it out. Stop Gambling, Start Winning. I give that one a strong recommendation. And Trapped in Trader Groundhog Day. That's me. It's probably you. And if you're not a consistent trader with a sustainable process, then, you know, maybe do something about it. I'm not saying that TraderLab is the answer for you. What I am saying is other traders that come to TraderLab have done the work, have changed their outcomes. And of course, past performance is never indicative of future results. You know, the problem with everything is we got to do the work, and nobody wants to do the work. You know, who wants to do the work? I want to push the button. If that's the way you are, then it's strictly a dopamine thing for you, and you're on your way, in my opinion, unless, you know, you're special, and we all think we're special. That's ego, but we're not special. We're just like everybody else. This is what the structured trades look like. And I'm not a vendor. I just threw these together because I don't know, I think it was like 5 years ago. I was posting, you know, some trades, and everyone's going, "What are you talking about? What? Why?" You know. So I threw these together, and it was informal. Inside of these 60 PDFs are some of these structured trades. Now, the thing you must understand, and some of this is research. I was working with Bookmap developers on some ideas. Some have been incorporated into add-ons. Others were, as they say, jettisoned, which is what research is all about, right? So even though I've been doing this as long as I have, I'm still looking. I'm still improving. I still watch these streams because I want to look at the nuance. I want to see, can I read this a little better? Can I shave a tick off my entry? If I can save a tick. In other words, if I shave one tick off my entry, think about it. Now, you may think, oh, it's only, what, per contract, $12, $12.50, right? if I shave $12.50 off my entry per contract, and I don't trade a one lot, then I'm $12.50 closer to getting risk neutral. What is that worth to me over a large sample size? It's huge. So I'm always working to improve. Why is the market rotating here? You're going to ask me. You see this? And where's my target? Here. What do I do with this? Here's your choices. Well, first of all, we come up here, we get a sweep. That suggests counter rotation. I come down here. Now, these are not anything more than interesting things to observe. Liquidity comes in here. I have a sweep here. I hit the liquidity. The buyers are here. Hold the liquidity. The sellers are here. Now, this is strictly order flow. They have pulled. What might happen? We might come back down. I don't know. So the thing about this is, if you were long, and remember we had 27, I should put that in here. That's that single. I'm just going to throw it in here since it's already taken out. Let me just put this in here. I already showed you that on the other charts. So this is a target, 27, and then we have this. We have this. What do you do now? Your teeth chatter, because if you don't know what you're going to do before it shows up, then you have work to do. You need a plan. When you come to market, there's no question what you will do. The question 100% of the time is what will the participants do and what kind of rotations might we get. So the plan is to follow your vetted trade management process. Some traders are going to hang out with their stops way outside. Other traders are going to be managing using order flow and reversal triggers. This here is a reversal trigger. This here is a reversal trigger. This could be a reversal trigger if it doesn't get above. So when you get a trigger and you break below the buyers, then what happens? The sellers are here. Icebergs. The liquidity is here. I come up. I got my buyers. I got my sellers still here. No way to know, by the way. I got my buyers. Going to the moon, Alice. Here's what you don't know. Do they stay in the book and absorb, or do they cancel and pull? That's part of the thrill of randomness. Here, I break low. Now, the test is here. So if I'm managing my trade, when it comes back here, I could be out here. I could be out there. This is a potential short, but it is now counter trend. So if you're trading with what we perceive to be a potential uptrend, maybe, then it's trade management, and either you're a counter trend trader, you would take a short, or you're not taking any shorts, you're just kind of going with the advancing side at the moment. And where was our buyers? They were here. Now we have to see. We have this, watch, out here, and we want to see now if the buyers come in right here. Let's see what happens. Not a recommendation. So we're looking at this. We're looking at this absorption, and we're looking at this right here where the buyers took control. Sellers were here. Let's just throw this thing in here. Oh, let me try to put a line on here, maybe. Buyers were here, sellers were there. Absorption here, buyers. Buyers take control. Where were my buyers? They were here and they are here. Where is support? Are you guys tracking? Any question? Can you see why you might use that behavior for potential continuation long? And now where's my resistance? Let's come back to the other side of, as they say, the table. My sellers are here. My sellers are here. Where's my volume? Right there. I'm going to throw another little line here. These are fractals. So if I got long, there's a couple things I know. My buyers were here. My buyers are here. Absorption. That's what gives me this. When I break below, this can be resistance right there and there. So if I take this long, which maybe because I'm over this suggests only long continuation trades, I'm looking for this. And this is not a trade recommendation. I'm just showing you auction market theory, how the market works. What is it going to do? No clue. So if I get long here, I have to get risk neutral, which maybe I'll do. And my stop needs to be, below this. If I get risk neutral, then I'm looking to go there. And if I can't get above this liquidity, then c'est la guerre. That's as deep as this gets. Are you guys following? How are we doing in YouTube? And how about Discord, TraderLab community? Can you guys see the rationale for this potential example of a long continuation trade and why and where? Does it make sense? And if it doesn't, come to TraderLab, by the way, if you're visiting. And please give a like if you're in YouTube. I hope you like this. And if you want to see this in real time, I know there's a delay in YouTube and it's hard for me to answer your questions. Use the link in the bottom of YouTube to visit the TraderLab community. The worst that'll happen is I think you'll come away a different trader. I'm not saying you'll be successful. I'm saying is you'll come away with a different understanding potentially of the business and maybe be able to develop an edge that you can develop the confidence in to actually execute. Fear is part of this. Apprehension. Why are we fearful? And why do we avoid fear? Because we're wired for survival of the species. And that means, danger, Will Robinson, or warning, Will Robinson, go the other way. So we avoid risk. It's part of our primal wiring, and it's okay. The problem with that is we have to seek risk here to get reward. So that force, that emotional force is constantly being triggered. So we're looking for certainty. If the terms confirmation are in your vocabulary, I'm looking for confirmation. What about if you can't have confirmation? So when you wait for confirmation, you're responding to fear. So you are looking for certainty, right? Confirmation, certainty. That means you're looking for no risk. Well, what happens if you're in an environment where you can't have that? How can you solve for something that doesn't exist in this environment? I ask you the question because that's what we're all doing. That's, depending where we are in our development. If you understand you're in the gaming business, that the only way to get yield is to exchange risk for edge over time in a random distribution of outcomes, then you got to take the risk to get the reward. Easier said than done. But if you don't have metrics, all you have is emotional triggers and fear. When you create tangibility, which is metrics driven, now you have a tool that you can open your trade plan, and this is what I talk about in TraderLab, building trade plans, and you know where your next trade is. You're sitting in your Barca lounger or your hammock, and you're waiting for the next trade. Where's the next trade? There. Now, is that your trade? Maybe not. It's my trade, and this is a little bit more advanced because what I'm doing is I'm trading something called fractals. And what is a fractal? Think Russian dolls. What do I know? I'm in this. Let's look inside yesterday's range. I had my selling. We got our responsive buyers. The shorts in the morning were the right context. No problem. Once the context changes, it's like turning a barge around, and now you're taking only the long side. The trades that are qualified in the current condition. And the condition is always changing. So you need to be attempting to get in alignment. So the business is one, in my opinion, of alignment in the fractals or time frames. Remember, Microstructure dolls, a vertical integration of time frame. Except in here, there is no time. It's behavior. It's behavior. Location, location, location. Behavior. Where's resistance? There. If I get long here, where am I going? There. And then either it falls out or it's going to hold this right here where the buyers took control. So let's see what it does. Not a recommendation. Let's watch the behavior. And one of the things I found for me, and I'm only sharing, what I had to do for myself, and that is narration. If this is too low, if this, then that. If this is too high, then what? Then back here. If this is too high and this is no longer too low, then what? Then potentially out the bottom. If that happens, the trade's over. So support, resistance. Let's think about this. I'm outside of the first hour. I'm outside of this key level. I'm inside of yesterday's range. And unless this thing goes to the happy hunting ground, I'm long and I'm okay with that. If I get taken out on a trailing stop, okay. That's my plan. Not saying it's a good one. It's the only one I got. So that's what I do. And if the trade fails, what does it tell me? Well, maybe too high, or maybe rotation, and then either come outside again and come back or not, or come inside here and come here. So I have a couple possibilities. If I get inside here, I can come here. That's called the IBF. And right now this looks like it's going to go south. Where are my buyers? They're here. So, and if I get under here, still, I need to see if the buyers here show up and we get absorption. Let's just watch together. And these are not trade recommendations. I am clueless, but not ignorant. And why am I clueless? Because we all are in a random environment. It's like, what's going to happen? I don't know. Do you? I don't know. Maybe if you do, come to TraderLab, clue us in. But in the meantime, it's trade plan and reading the auction and watching how the participants test locations and pricing. This is a shopping experience. If this is too high, this was too low. Well, if that's too high, then potentially out the bottom. And if we fall out under here, then it's there. If this is too low, then that. If I don't get through there, so if not, then what? Back here. If I fall under here, so if this is too high, then what? Then that. If this is too low, then what? Maybe there. If it's not too low and I just pick stops and I get my buyers who are over here, then potentially back around. If I keep going, I'm looking for a short, and it's not a recommendation. That's what I know. See, now let's watch. Right now, icebergs, absorption. The idea of this is, if the buyers like the price here, are they going to like the price here even better? And do I get the absorption and then I come back? So that's the only question. I'm not inclined to like it, but I'm not inclined to predict it. I'm just here to align. The business of trading, at least from what I found, and the buyers are here too. The business of trading that I have found, at least for me, the way I interpret it, is it's alignment, not predictive. But I understand what happened here, and I understand the buyers were here and the sellers took control. If the buyers come in here, I know this is my resistance. That's what I know. I don't know if it'll get there. I don't know if it'll take it out. I don't know anything. What do I know about this level? I had my buyers here, right? That's what I know. If I can't get back all the way up here and outside of here, then what do I know? Trouble. That's what I know. So let's see what it does. Do you guys have questions? I hope this is making some sense. Let's watch it. Please give a like if you're visiting at YouTube. So right here, we want to see the behavior. Right here is high volume. This, we want to watch this right here. That. This is a little auction. Too high. Down here is too low. And your volume is right in here. So I got that. See the volume where the buyers were? So can we come out here and get over there? If not, then we're going to do the opposite and we're going to come down. So you can kind of look at these things. And this is where order flow helps. And I'm also using the profile. Yet we're under this, so it kind of looks a bit negative, you know. So I just look at it and I go, well, okay, you know, bing, bang. Where's my buyers? Well, they're over here. Sellers got run over here. If the sellers got run over, do my buyers, icebergs, show up here? And can we then squeeze out this leg? If I can't squeeze it out and I come under, then right here, then potentially here. Not a recommendation. And when I say potentially, it might just come there. Because the stops are under the swings. Another thing you should be doing, write this down. Think like a retail trader. Don't act like one. One of the greatest assets I think we have is our experience. Now, what does that mean? Everything we've done before, trailing our stop under swings, wherever they are, micromanaging all this, which may or may not have an edge, right? Everybody else is doing the same thing. If I get a reversal, then I know there's going to be stops under here, because that's the last high, under here where the buyers were. Sell stops, sell stops. Once I break here, you're going into sell stops. If I come back here, this is too high. If I can't get back out of here and over this volume right here, too high. What does that say? South of the border. Where might I try to go? Now, this is tricky because this is an outside edge right here in this, right? This was a key level. If I get under here, I get this. If I don't get under there, then I can just rotate. Buyers are there. You see how you might use this? I hope this is useful. I know this is a lot to digest, you know? And in TraderLab, it's not about, gee, let's get 10 trades and go crazy. How about one? One that you get intimately familiar with, where you could teach it to somebody else because you understand when it's qualified. The problem, one of the problems we have is retail traders, it's initially thinking everything's plug and play. You know, every time the spaghetti crosses over, you do something. Well, spaghetti or indicators, it doesn't work that way because they're always going to cross over. But here's the question for you. Is this a long? Is this a short? Is this a long? Are we in an uptrend? Or are we in a counter trend in an uptrend? How do you use this? And the problem is, at times we have winning trades, but if you're not a profitable trader, the answer's in your metrics. And there's a lot of reasons. One is you're not trading with an edge. You don't know where your trades are. You're just trying to chase rotations around. You're fearful because you're always fearful, and so am I. But instead of fear, I'm apprehensive. That's my wiring. My metrics, though, make it tangible so I can manage the lunatic under the hood. You know, fight and flight, FOMO, fear, you know, waiting for confirmation, all that stuff, in an environment where it doesn't exist, right? Now, we know we have fundamental news inputs because of what's going on with Iran, you know, all of that. The market does not like uncertainty. So we just have to follow it, though. I personally, I found out over the years that I can't predict anything. I know nothing. Only thing I can know is what I observe in the auction is the current behavior of the participants attempting to establish value. The purpose of the market is to find out what's too high, what's too low, what's fair. And that's why you get rotations. Is this too high? All right. Is this too low? Well, maybe not. We know that's too high now. And if we can't get above here, then what might be too low? Under here. Where's my stops? Under here. Where might the market go? Market goes up to go down. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. If I can't get above here, hasta la vista, south of the border. You took a long here, you're scaled there, you're out. If you take a short here, subject to your plan, you're looking down here. That's as complicated as this is. But none of this, if they're not vetted, they're not your trades. You're just a tourist, and your trade might be down here or there. See? It doesn't have to be anywhere. It's where you know, you read it. I don't use any indicators, and the reason I don't is it's that concept of garbage in, garbage out. And what a lot of us do is we load indicators on somehow that more gives us more certainty, right? That's the psychological need. Well, more gives you less, I believe, because more gives you conflict and randomness. Randomness is no good. Market's random, you see? So if the primary element we operate in is 100% random 100% of the time, then we can't be random. The environment's random. What happens if you add random inputs to random environment? You really got a problem, because then you just get random. So if you have anchored inputs in a random environment, you can measure it. And that's where the edge is extracted from. So for me, well, this could be a short, not a recommendation. This is the Warning Will Robinson moment. This was your support. We found our buyers here. They failed, you see. So let's just see what it does. Not a trade recommendation. So this can be a short, and you're going under here. And then maybe back here. That's as deep as this gets, and it's all random. So can't get more excited about it or fearful about it than that. The word fear, let's change that to apprehensive. Isn't apprehension fear? But it's kind of soft fear. So soft fear, but it's still fear. Are you guys with me? Please give a like, by the way. Yeah, 46, it was pretty conflicted. The whole thing is kind of strange, you know. So how we doing, guys? This is the IBF, structured trade, not a recommendation. It is a mean reversion trade. Now, a couple things can happen right here, because this is a very key location. Outside edge, remember, maybe it's on sale. I'm not paying that. Rotation. Right here is key. So if you take a short here, if that's your trade, you've got to get risk neutral here. And here's the possibilities. The trade's going to get taken out and you're going to scratch from this area, or you're going here. That is the trade, not a recommendation. Let's see what it does. I got a few minutes left. Any final questions, throw them in there. By the way, I appreciate you all visiting me here today in YouTube. And if you're interested in TraderLab, if you want to download those 60 PDFs of these structured trades, and again, you have to vet everything for yourself. There is no plug and play. Sorry. I wish there was. Wouldn't it be easy? We'd all have plug and play. We'd sit in front of our computers with our feet up on the desk, and at the end of the session, go down to the basement to the ATM. That's our fantasy, isn't it? Well, business is different. Where's our location? Here, right? So what do we know? This is a potential short, and where do we have to scale? Here, there, right? Right here in real time. Do I know what's going to happen? Nope. Do I know what can happen? Yes. What do I know? My buyers were here, right? Can you see how you can put this together? Now, I can't predict anything. That's not my business, because I can't do it, and nobody that I've ever met in this business can predict anything either. What you can do is attempt to get alignment and then know what's important. In other words, where might we get a reaction? There's our reaction. This is our support. This is a short, and this is your target here. So you got to get risk neutral. If this is too low, then we come back across, and that trade is over. It's as simple as that. You don't have to think any deeper about it. But what you would know if you're in TraderLab is the locations. So now, let me give you some ideas. What do we know? If this is too high, now this is too low, and this is too low, what might happen? This is now, there's two trades here. One, this, of course, you know what this is. It's a reversion trade, and it's back to the IB. Then if we get under the IB, we can go here. If we can't get below this, then we continue higher. That's all there is to this. And I couldn't tell you which one. What do we know? What we know is that's a key level, right? And what we know is this is the outside edge. And in the distribution, this is where, oh, it's on sale out here. So if in your trade plan, you have these things, you're trading counter trend, you'd be working with this to there. If you're trading with the trend or the context, you'd be only looking for longs for continuation. Both are correct, subject to you vetting it. I hope that makes some sense. And it may seem, well, and why am I talking from, as you say, both sides? Because you can trade both sides. But each side, the thing about it is, as long as we're above this, we're going north. One second, I got a fire engine. As long as I don't stop here, things are good. So remember, let's come back to the higher time frame. We can trade any structure at any time. 1375, remember? Shorts in the morning, cross over the 13, longs, come back. Then it's either shorts to there and under, or return back, continuation, longs. You see? There's not a right or wrong. What there is alignment with the condition. So I'm showing you both sides. Now, where's my resistance? My sellers were here. If I took the IB continuation trade, remember there's two trades here. There's the IBF, which would be from here down. There's the IBC, which is from here back up. So can you see how you can slice it up and trade from both sides? Yeah, Beverly, the psychology of this thing, of trading, is really a problem because we're pushing back against this fear and FOMO. Fear of missing out. So we wait for confirmation, and we're getting long where? Up here? Now we're sure. Well, what are we sure of? Nothing. Look at our risk. If we anticipate the location, then we're stalking it to see, do we get absorption and a reversal? Let me show you a little more. And don't forget, we have resistance here. Absorption is here. No clue. Sellers are in control here, here, there, going to zero. Buyers get above the sellers. And here's the other piece that's most important. What is the term in real estate? Location, location. It isn't that it happens. It can, I'm seeing the same stuff all over the place. Resistance, support, trend up over this, right? Longs only. Remember this morning? So if you're a counter trend trader, here's what you can do with this. If you don't take counter trend trades, which in my world don't have the same edge as being in alignment, if you're going to trade counter trend, which you can, you first have to become a profitable trader trading in alignment. What I suggest, and you have to vet this, is that developing traders only take the trades in alignment and use counter trend for trade management. In other words, you get a sell trigger subject to you vetting it, and you're out of your long, and then you're waiting for your next long, wherever that is. Where's the next location? It's here. So that's your long. And then you're using trade management, And if you get a short trigger, you could be out of the trade. But what do we know? Where's our targets? There. Not a recommendation. There. And maybe out the top. Who knows? Final questions, guys. I hope you got something from this. And I really appreciate you guys leaving a like in YouTube. And there's a link down there if you're interested in this process, learning about the business of trading and potentially creating sustainability, a business versus, just sort of being a visitor. Then use the link in the bottom of YouTube. I can't, obviously past performance is never indicative of future results. Everybody finds their groove, kind of like what speaks to you. What rotation do you develop an edge with, and the confidence to participate in? For me, I'm okay with this, but I'm more okay with this. What this tells me, let me explain what this tells me. Let's say I only want to take longs. Well, this tells me the market can go lower. Right here, it's telling me I can rotate, but my trade location for my structured trade is here. So when I see this, it tells me the market's going lower. I don't have to be taking any shorts. I can be using this information to say it's not time to get long. Where's my trade? And what do we know? Too low. And of course, there's slop. It could, we could do anything, right? It could do anything. So out here, when I get my buyer and I have my last selling here, I can be getting long here, stops under here, and then getting risk neutral, looking for continuation. Now, this is still sitting in the book. So I would be risk neutral, and then my stop goes under here, and then I deploy a trade management process, or I hang out in a Barca lounger, and I risk scratching the trade because I'm going for targets that give me a good risk reward here and up the food chain. Hope you got something out of this, guys. Don't forget to leave a like. These streams are available to Bookmap Discord TraderLab participants to review over the weekend, as well as that library of webinars. If you come to TraderLab, say hi, introduce yourself. It's a serious community. It's about the business of trading. There's no holy grail. I wish there was. And if you're still looking for it, you might want to put your energy someplace else. Unless, of course, you found the holy grail, then definitely visit in TraderLab and help us improve. It's a community effort. There's a lot of work here. This is advanced trading methodology. It's not complicated. It just means changing your beliefs, because if your beliefs are not aligned with the actual business you're trying to be in, you're just going to keep waking up and trader Groundhog Day. And I suspect if that's what's happening to you, you might want to consider something different. Thanks, guys. Have a terrific weekend. Look forward to seeing you next week.